All right. All right, that should be good. So, guten Morgen. Good to see you. Happy Monday. It is 6:34 on Wall Street, about 3 hours before the open of trading. It's time to get your global macro on, where we uncover the best fundamental opportunities across global markets. This week in particular will be very important in regards to market sentiment over market fundamentals, we'll say. And that's because we have a lot of earnings this week, and many of all the big names. In fact, the Magnificent Seven, I think they all report this week. So that could be center stage most of the week. Oh, and we also have GDP and PCE, which are measures that the Fed watches incredibly closely. And that's at the back end of the week. So, holy smokes, that is fundamental. So, we're going to have massive market sentiment and we're going to have massive economic data. The Fed isn't speaking right now. They're in the blackout period because May 1st is a Fed meeting. Like, holy smokes, what is going on now is incredibly important. So, what we want to do is use this dashboard when we log in to track what's happening right here and right now and contrast and compare that to what should be happening long term. We can do that on the dashboard very quickly. We can watch changes here on the commitment to traders report, but that is much slower. That's a week over week process, and it's only institutional investors. Although Quantbox does have retail positioning as well. All that will lead to possible changes in central banking policy. Yeah, I got music coming in from somewhere. There was nothing, and now there's something. All right, there we go. Uh, all right, so that'll get us slapped on YouTube. Anywho, and then this is another page that you're probably going to need a lot this week throughout the trading day as market sentiment comes in and out and in and out. This will help you measure that. Okay. It's one of my favorite pages. So, anyways, look, if you are watching this on YouTube, swing by quantbox.co. It's not a lot of money. It comes with a trial, so you can make sure your satisfaction will be gained for the $8. And there's so much more I haven't even covered. Right? So much more I haven't even covered. So like this, what do you think about euro dollar? Well, that's what I think about euro dollar. Retail positioning, institutional positioning, technical trends, seasonality, economic data, so on and so forth. Pretty radical. Anyways, let me remind you that trading and investing are risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's log into the pro. Okay, yields are about where they've been for the last week. This says zero, but that means like the market's not open. That's why it's zero. But relative to what's been happening over time, I mean, why don't we just look at that price forecast? Sometimes this one's hard to the yield. Sometimes is hard to display. Um, mm, There it is. So you can see the yield on the 10-year. Oh, let's zoom in a little bit for you. You can see the yield on the 10-year has been going up, but there's an opportunity here for maybe it to come back around. Remember, having it come back around to the downside is good. Okay, good. You want it to come down. Well, another thing that you may not notice on the calendar right now, I think it's early in the week, there's a huge, I think 2 huge bond or treasury auctions. I mean, to the tune of, like, the largest ever. Hey, do you think the government's borrowing money? Yeah. Well, they just gave away $100 billion for free to our allies. So tack that on. So anyway, well, they have to borrow the money somewhere, and so we have a couple of auctions coming up this week that are like the largest ever, and that's government borrowing money. So the big question is, are there investors? Are there enough investors to cover all of that? Right? Will the credit card company raise your limit? Right? Maybe. Right? So, anyways, that's what I'm watching there, and you can see statistically speaking, down, and that would be great, and that would be normally a risk on scenario, but still above that moving average. But so, anyways, stabilization there, maybe at the very least. Uh, Oil, another dip back to 82. Well, in this case, 83. It definitely had opportunity to fall even further if it wanted. Okay, gold coming off a little bit. Remember, it was at 2,400 on the way to 25, so maybe a little dip there. We don't know. S&P 500 closed below 5,000. I think the futures market's a little bit above, so we'll see how that shapes out. Not a lot of news on the calendar today, I think, and we'll look at that in a second. Everything else, like all the earnings and all the economic data, is later in the week. So we start out quiet. So maybe, I don't know, maybe something. We'll find out how the market goes. Euro dollar, 106 and a half. Bitcoin up. Boy, this thing was 62 not long ago. So there you go. There you go. Cool. And look at this. A little bit of risk on has creeped into the market. This was -4, and this was -4. And I think this was -4 on Friday, certainly Thursday. So here we are on Monday, and things have improved quite a bit. What does that mean? Well, you can see month over month, VIX is up 28%, but last week down 6. So that is good news. That is bad news. Okay. Gold was up 9% month over month. That's bad. But it's flat now. So that's not bad. Month over month, S&P 500 down 5.5%. That's bad. Week over week, down 2%. That's bad. Okay. Okay. Yen down 1.63. That's good. Yen up 0.63. That's bad. See? Big difference there. Yields are up month over month, 8.6%. That's bad. Well, they're flat this week. That's good. Or not bad, just not bad. Dollar was strong, 1.6% gain month over month. That's bad. Flat. That's not bad. So, anyways, there you go. So things have stabilized at the very least. Maybe it's that Fed meeting coming up. Maybe it's that PCE and GDP coming up. Yeah. Okay. And I would suggest a quick glance at the scatter plot. Doesn't it look like this? If you were going to draw a mean, what is it? What does the mean mean? Unexpected. Okay. Unexpected. So be careful. You're either going to sell everything up here, buy everything here, or kind of walk away until things come back. Okay. And you can see it in this risk gauge. Oops, let me get rid of the drawing tool. back in the risk age, you can see things that were or are no longer. That's why we call it mixed. So, what does this mean? Be very careful. You don't have a great underlying trend. But the opportunity is, you know, if the shorter term, if the daily and weekly rolls back to risk off, then everything up here you'll be selling and everything down here you'll be buying. Maybe. Anyways. Or at the very least, if these go risk off, that has congruency with the underlying trend. Let's just put it that way. So if later today you notice risk off, risk off, risk off, you're buying dollar. Okay. Just that simple. If this even rolls to risk off, this will probably this would have to be risk off too. So yeah, so watch this. The trend is the underlying trend, the longer term underlying trend is buying dollar. So at the very least, you could look at the scatter plot and say, do I have an opportunity to buy a dollar today? That's all. Okay. Filter everything with your bias. Okay, like I said, today's calendar is quite light pink, kind of a rose, dusty rose. Tomorrow, French fries. I keep looking at that and it says French fries. Not that I'm on a diet or anything. But yeah, French fries tomorrow, but I'll be sleep. Okay. So manufacturing data of Germany. It's one of the largest manufacturers in the world. And hasn't been doing great. Okay. Numbers like 42 or 40, right? 42. That basically means recession in the manufacturing industry of Germany. In the United States, I believe car dealerships are struggling to sell cars. Tesla cut prices again, and they have huge inventories. You know, the autopilot, they cut that price by 30%. So if you want to buy a new Tesla S with autopilot, I think the car is $2,000 cheaper and the autopilot upgrade is 30% cheaper. Wowzer. The stock is down 40% this year in less than 5 months. 40%. Holy smokes, eh? Oh, for sure. Anyways, and then tonight, Aussie inflation. Cool. So you could trade Asia today if you want. That's tradable. Okay. Wednesday, nothing on the eco, right? Nothing in the ecosystem on the eco calendar. But Tuesday and Wednesday, right? And I guess I should say that on Tuesday, there's nothing during the US session really. I don't think you care about these manufacturing PMIs, do you? But a real market mover, I don't know about that. But I think was it Tesla on Tuesday? Is it Google Wednesday and Amazon Thursday? Maybe switch that around. Amazon Wednesday, Google Thursday, like Nvidia Friday. Like there's hugely watched, very, how do you say, high beta. The market is very sensitive to how Nvidia is doing and how Amazon's doing and how Tesla's doing. So all of that is kind of the underlying nervousness and jitteriness in the market that you can't see. Okay. So, anyways, holy smokes. Should be interesting. So, nothing on the calendar Wednesday, but there is a big something, right? Yet, yeah, TRADARS I mean, look, we can pull that up. This is the other AI service I run, and it says other things, right? And oh, yeah, I got to, and then reminds me I got to update. So again, everything is off 1 hour. I can confirm that. We looked at it on this side of the development, and everything is set correctly. So now we got to, something's on the server is wrong. So we got to look at that. But anyways, yeah, durable goods on Wednesday. Okay, might be okay. There might be some moves there. Okay. Normally it wouldn't be a big deal. I don't see that. See, here's the thing. Durable goods is a volatile um, result because you don't buy a refrigerator every day. And that's what a durable good is. Now, there's airplanes in there and a bunch of other defense things, and you can take that out. So it's core durable goods, but you don't often buy durable goods by definition. But if the economy is doing poorly, you repair your washing machine instead of buying a new one. Although everything is so cheap now compared to 40 years ago. Like 40 years ago, you'd buy a washer and dryer and it'd be 3 months' salary and you'd plan to keep it like Le Creuset pottery, pots and pans. You're going to keep that washer and dryer forever. And now you just go to Home Depot and they're like 350, 400 bucks each. You can get brand new ones. And you're like, why repair it? Right. Um, so, but things have changed a little bit. But the idea is if we are going into recession, or really if the consumer is still willing to spend and have access to credit, then they'll buy durable goods. You're like, oh, let's get a new refrigerator. Oh, let's get a new washer and dryer. Right? No big deal. But when that stops, that will be a big deal. Now, so anyways, it's volatile. So really, does it really matter economically to the economy? Nah. Does Quantbox care that much to suss out the economic situation in the United States? No, not really. But what TRADARS is saying is, oh, it produces volatility in certain circumstances, and when it does, there's a repeatable pattern. But it doesn't make it economically relevant, let's say. But anyways, big, the big ones, obviously, for sheer GDP, that matters. Home sales, that matters. And then BOJ. So another great Asian trading session this week. You're blessed. Be grateful. And then the Fed's measure of inflation. And that's going to be a full percentage point below CPI. Now, how do I know that? Well, because I have a time machine and I've flown to the future and I looked at it and then I came back. No, I'm sure if you go to the Fed and you do some research and you pull up the charts, you can find that info. And then going out to next week, Wednesday, huh? The big battle royale, we're going to do Fed and monster trucks. Yeah, it's going to be great. It's going to be a good shoe. Okay, Fed meeting. Jolts. Okay, ADP. Wowzer, what an amazing day. Okay, followed by non-farm payrolls. And here's the thing, I'm slightly bummed out. I'm a little bummed out. Right here on this day, I was invited to see former Governor Kuroda, governor of the Bank of Japan, speak in New York City. And I'm like, yeah, but I got a CIA meeting this day, and then I got non-farm payrolls that day. And do I want to be doing that out of a 200-year-old hotel room in Midtown Manhattan? And I'm like, you can't imagine how many things go wrong when you need to pull something off like that. And I can just see everything going wrong. And I've been in hotels where they're like, oh, you get, because you're a gold member, right? You get the high speed internet access. I'm like, oh, sweet. And then you get there, and this has actually happened to me. Yes, you have internet access with zero upload capability. What does that mean? You get your email at gig speed, which is irrelevant, right? You can watch Netflix. I'm like, but you got porn on your hotel room TV. You don't need Netflix. And then what? Right? But you can watch YouTube, but you can't upload to YouTube. You can't live stream. And I'm like, well, nobody Zooms at this hotel. Like, really? So, anyways, I've been caught in situations like that where there's no upload, zero. So I don't want to put my situation where I can't do my CIA, I can't do the non-farm payrolls, I can't do the day trading group and the swing trading group. But imagine doing all that from the hotel, right? CIA, swing trading group, non-farm payrolls. Oh, there's so many things that can go wrong. So I'm going to stay home and I'm not going to hang out with Kuroda. Too bad. I had to send my thank you card, but declined. Too bad though. So now, by the way, Kuroda now is a professor at Columbia University, which is an Ivy League school in New York. So now he works there. So, anyways, this week's super important. Next week's super important. Like, oh my goodness. Okay. Remember it though, because in the summer when nothing's happening, you'll be complaining. So write down in your gratefulness card, right? Every morning, count your lucky stars. You got your vol. All right. Take a look at our Lufle COT. Market's still heavily short the yen. We were worried about a spike, but that ain't happening. Swissy very weak. That makes sense. The central bank's cutting, although there was interest in owning Swiss franc because the stock market has dropped 6%, and that'll create Swiss franc strength. But then it swings back the other way because, well, you might be buying Swiss franc for safety, but it's not paying you a yield, and then you're like, dope, I got to earn yield too. So then you quickly want to deploy it somewhere else. Maybe you want to buy some South African rand or something. Really, it's right, right. You buy treasuries, right? What are they? What's the saying? I heard a cool saying: treasuries and chill. It doesn't rhyme very well, but I heard a saying. It was something like that. Treasuries and chill. Why not? 2 years paying 5%. Wow, huh? All right. So, anyways, what people buying the S&P 500 back? They're buying the dip. Holy schnicker. Now, this doesn't cover another wave down that we had late last week. This is early last week. But we know, isn't this nice to know, by the way? I constantly hear. So I have a slightly new routine where I actually work out in the mornings, which is strange. I haven't done that ever. So anyway, so I'm listening to Bloomberg, and they had some wonderful expert with a big fancy job title. I'm sure he makes 10 times more money than me, and and he's running his fund and he's talking about dollar and he's talking about this and he's talking about that. And I think he's wrong on everything. I'm like, this guy doesn't know what he's talking about, right? Like for example, like he was talking about, gold being high, which doesn't make any sense because dollar is strong. And I'm like, well, did you pay attention to this inflation rising month over month? Like, dude, that's why you buy gold. Like, anyways, so having this data, we just know. And I'd hate to be in charge of a multi-billion dollar or $10 billion firm. And you're like, we don't know why gold is up and why dollar's strong. I'm like, what do you mean you don't know? How could you possibly be on Bloomberg and not know? But anyways, what we do know is factual. Week over week, there was a huge decline in shorting of the S&P 500. Remember, the market's 50-50 or 60-40 or was 60-40. Now it's 56-43. Nice to know, right? I mean, like we know this factually. And not only did the bears stop selling, they became bulls for a massive change, but it's hard to see. Remember, it's hard to see. This is why we have to do the research. It's not totally apparent. Like let's say if you're new to fundamentals, then think of this technically. If you get a green candle on the chart, it's not always bulls buying. A green candle often is produced by bears leaving. No one bought it, but a massive amount of people sold their positions short, which therefore the brokers enter long positions to offset the short. So you can get a massive green candle, and all it is short covering. No buyers at all. So with this research, we can discern, well, is a green candle bears covering their shorts? Or is it bulls actually deploying capital and buying the asset? There's a difference, right? Bears taking profit versus bulls acquiring. So we can see here a very significant change in bears. A huge percentage of bears got out of the market early last week, and a huge increase in bulls. That is legit detail. So that's quite bullish. So now we have to track that. Why? This is now we don't know why. Is it investors getting out of Nasdaq because Nasdaq broke through support and it was the last one to finally break through support? So did people move out of Nasdaq and into SPX? Well, how would we know that? Well, 10% decline in bears. Sorry, I'm looking at the wrong one. We'd have to look down here. But anyways, before we look at the data, I want you to understand what we're trying to do. Where's the money going? And where did those bulls come from? Are they rotating out of other assets? Now, what I've taught my Council of Investment Advisors is when you're in a risky period, you move out a high beta and move it to lower beta or neutral. You might just simply during a decline in the market, you simply want to be neutral in the market so the pain isn't so bad, but you stay an owner. Okay. And we call that rotation or rebalancing, right? And so then you look at the data, and this, like, for example, NASDAQ is more sensitive usually to changes in market conditions because their growth and you're betting on the future. Oh, you want to buy a company that makes a bicycle for $3,000 and it only gives you one tire and they're not profitable and the company is worth $1 billion. You're like, dude, that's a little high risk, right? And they're not even profitable, you know. Heads up, Peloton, give people two tires, double the value, right? But anyways, what you find is, well, when you're uncertain about the future, in particular, if you're afraid of the future, you don't want to own an asset like that. You want to own something safer, right? And so that's why that, you know, if Nasdaq has a lot of those companies, then you'll just want to rotate it over to like Amazon.com. Even if there's a recession, people are still going to buy stuff on Amazon.com. There's no doubt. So all of a sudden you move over there, and Amazon's not a growth company anymore. It's a monopoly, right? So you want kind of go over to that safety. And so we can track this. Okay. And so you look at NASDAQ and nothing actually happened in NASDAQ. Now, this is right before it broke. So now you can go through this and try to figure out where did the money come from? So you might look at like the biggest losers. Okay. There's a 2% decline in, right, for Russell, which are small companies. Okay. Some money came out of Swissy. That's expected. Some money came out of Euro. Okay. Well, that's interesting. Okay. That's interesting. Money came out of CAD. Look at It's not that people are selling their Canadian dollar position. Remember, this is Tuesday of last week, but they just straight up hate it. They're just straight up selling. Like, look, 2,000 people bought it, 32,000 people sold it. Like, whoa, 16 to 1. That's a little one sided, huh? Everybody on the south side of the boat, it's going to tip. But right now, Canadian dollar more recently has actually had a little bit of strength. So some profit taking maybe, but where are we on this list? Yeah, market's quite bearish. Okay. And the pound has had some strength lately, and lately meaning the last 2 or 3 days, but nonetheless, no one is buying it. So bulls are exiting, and the number of bears is up 22% week over week. Like, wait, what? Wow. 10% less bulls and 20% more bears. That is nasty. So how do you use this information, by the way? You're like, Wayne, this is really great, but I don't get it. Okay. Well, you can go to your chart technically, for example, and say, I want to trade along with the institutional investors. Right now, the two if you had to pick the ugliest of the two sisters, right? You're going to look at pound, you're going to look at CAD, and you're like, okay, well, one is 50-50 and one is 25-75 to the downside. Okay, maybe you want to pick on Canadian dollar. You want to sell Canadian dollar. Okay, great. Well, do you have a technical setup? You're like, I don't know. I'm not even looking at a chart. Well, now you got to do your job. This role that you're playing with QuantBox is you're playing the role of a quantitative analyst. It's your quant in a box. So this is like someone doing that work for you, your assistant. Now, of course, that assistant costs you $220,000 a year or $80 a month, you choose. So now you're like, okay, well, maybe this week the bearishness will continue for the Canadian dollar. We don't know. But you can start with the hypotheses, right? And then you use scientific methodology to confirm or deny selling the Canadian dollar. Now you can look at a couple of things and you're like, well, so what do I want to do this week? Do I want to sell? Do I want to buy USD CAD? Okay, now you do your research. Or maybe you want to do yen. So now you do your research. Do you want to do a cross pair? You want to do Euro CAD? No. You want to do Kiwi CAD? No. Do you want to do CAD Swiss franc? Okay. You want to sell it? Oh, you could maybe. So now you put that on your list, maybe. Okay. You see? So lots of neutrality. So CAD Swissy is a maybe for a short, or what was this one was neutral, right? Yeah, or USD CAD long. Okay, so now you're like, okay, interesting. So there is a CAD Swissy short, maybe. Okay, I don't know if I like that one. You can probably tell why. Okay, but that's okay. We're only doing technical analysis, but we know if I wanted to sell CAD, this could be a choice. But is that a sell right now? No. Why? We're riding the 5. We're setting up at 2155 cross up. We've breached a channel line. So we just sit here because we don't know the future. I just know technical analysis where uh, this currently, this currently is not a good sell. Well, maybe tomorrow, eh? Oh, for sure. Okay, so I sit and wait. It might not show up. Uh-huh. Well, maybe because because when we look at the commitment of traders report, we can see that, our analysis is showing us that here the market was selling the Canadian dollar, here the market was selling the Canadian dollar, here the market was selling the Canadian dollar, here was selling the market was selling the Canadian dollar. Okay. Are they going to sell it this week? I don't know. Things have changed. Tensions in the Middle East are not so tense, for example. And we're waiting for a Fed meeting. So the market's like, oh my God, there's going to be no cuts. And then they're going to say, oh my God, the Fed's going to do 3 cuts. And, who knows? The attitude might have changed. So this is why we confirm with scientific methodology. You might have concluded that you're interested in selling Canadian dollar, but this is not how you sell a currency pair. So you sit and you wait. You know what? It's Monday. By Tuesday or Wednesday, we could be doing this again. Well, now you're game on this way. Yeah, for sure. Okay. So good. Great. Might be a great sell. Great. Not now, not today. Smell you later, dude. So what's the other one? How about Canadian US dollar long, Canadian dollar short? So I look at it. Let me pop it up. Let's take a look. So we're interested in buying, right? Is this a good price? Well, we are on a monthly pivot. It's not really the pattern I like, and it's not really, it's not great. Is it a buy? Well, I do know it's support. And if I'm a bull, I'm allowed to buy at support. But this is a 4 hour. So I see kind of basically a touch and then a touch and then a touch and then it's a touch. So we see it there. The market sees that price. This is definitely support in the market. But then I should be on a smaller time frame if I'm interested in buying it. Uh, I would prefer, you know, a better market condition on a smaller time frame. I want to see this develop. It definitely hasn't developed yet. And I probably, if I've made the decision that I might buy, why? Fundamentally, I'm interested in selling CAD because the massive selling of Canadian dollar in the by institutional investors. So okay, so if institutional investors buy dollar this week and they remain bearish on the Canadian dollar, well, fundamentally, I should do all right. So now I confirm it with technical analysis. I have a support line, so I am allowed to consider it. It's too early right now, maybe because the markets haven't opened yet, or maybe we have a huge risk on this week. All the Magnificent Seven print money And boom, the US dollar weakens and this falls. So I have to protect myself of being wrong this week, even though I might be correct this month because I'm doing fundamentals. So now I can go into a 15. Does that look like a buy? No. Does it look like I'm at support? Yes. All right. So now I could be aggressive. No, I'm very rarely aggressive. Um, okay. I'm too pretty for fighting like that. So well, I could make some decisions here. And the decision is on my level of aggression. Your decision and my decision and everyone else here could have slightly different decisions. But let's say I absolutely totally believe this is our line. That's the price. USD CAD's going to go up and the US market's going to open. We're going to be at like this is only just on a 15-minute chart. You know, if I go on a 4-hour, there's more touches of this price. So this might be like an 8 touch bottom. It's definitely real. So, under the rules of engagement, okay, I can buy off of support. Now, tactically, what I would prefer if I was me is buying at the next level of support. And you're like, well, Wayne, what level is that? And I said, that's a great question. Let's cover it. Okay. This, maybe even a little higher. And you're like, Wayne, that's not support, that's resistance. Are you sure? Well, what if it does this? Now it's support. And I buy that. Okay. So you might do this, buy at the bottom now, and I might wait for the break, pull back, and I buy it here later. Okay. It's the same, only different. Because to me, the biggest decision is are you a buyer or not? Okay. And if you're a buyer, okay, you buy at support. I would even prefer to wait even longer. Shows you how ultimately conservative I am. Okay. Even this may not be the most amazing breach. So what I just covered, now that I backed out, I have to make this a little smaller to try to make it like scale a little bit. What I just covered was okay, um, this being a buy. Okay. But very often, I'd prefer on the smaller time frame, I might actually prefer this as the buy or this is the buy. Okay, this is valid, but I'm still looking at this level as being massively resistant, right? The other thing over the years I've taught myself as a survival mechanism, by the way, not as how do I make as much money as I possibly can. That attitude doesn't seem to be a good survival mechanism. The one is, um, well, in this case, what I'm trying to get to is before you get a reversal pattern like this, like the one I just did, that's such a small time frame, right? That the giants of industry, the giants of the market don't even see that. They don't look at a 15-minute chart. That's so amateur. So you need a double bottom of a double bottom. So if that's your double or triple bottom and you trade a breakout, in my mind, and again, it's probably just a survival mechanism. But in my mind, what you'll see or what I prepare for is that, okay, let's say you do get a break and it does come up and then it's going to come all the way back and then we do it again. So now I have to do this on a 4-hour. So going to this idea that a bigger institutional trader won't even see your 15-minute chart, it's true. what they're doing is something similar to you. And they're like, man, I'd like to buy a double bottom, right? This kind of stuff. That's what the institutional investor's doing. And my point that I'm making now is retail tends to do this up. Okay. Okay. And now what? Now they're 100% convinced it's up. No. Hmm. Okay. And then they're 100% convinced it's down, so on and so forth. It's hard to fit the candles in, but there's two wars going on, if you will. The higher time frame and the lower time frame, right? So be prepared for both, really, if this um okay. And just one last thing. US dollar is typically strong in a risk off scenario. And the or the easiest way to measure risk on or risk off, if you don't have that gauge. Now, we measure 6 different things to make that decision. But if you had to choose one on the short term, like, is the market going to drop today? If the stock market's dropping, yeah, dollar's going to go up. Now, that's a little simplistic, but it's a quick and dirty method. QuantBox looks at all kinds of things like volatility and metals and the stock market and the treasury, right? The bond market and the yen and the dollar. But hey, man, if the US stock market drops 1% today, this is going up today. And you already want it to go up today. So now you're ready, willing, and able. And you'll be watching the market open. And if it's down, if it's going to be an ugly day in the stock market, people want to get out because they're worried about all the earnings coming out. And they're worried about GDP, and they're worried about PCE, and they're worried about, and we're 10 days away from a Fed meeting or something like that. And they're worried. They're just like, I don't want to be exposed to any of this. Well, that's down, baby. Probably be buying some dollar, and probably that Swiss franc gets strong again. So that's how we do it here at the QB. YouTubers, if you're actually lurking, why don't you step up and risk the $7.90? It's pretty simple. QuantBox will make you taller and more beautiful. Probably shed 7 pounds in your first month. Yeah. So check it out. Maybe you'll find some happiness hidden in all this economic data. Peace on earth. May the pips be with you. May our profits be above average. I'll see you soon.